Hello, good afternoon, warm welcome to the marketplace. In our headlines, government embarks on final engagement with stakeholders ahead of 31st January deadline for domestic debt exchange program as it expresses optimism of reaching an agreement with all parties.
An exceptionally strong case as Ghana, and I think everybody is looking for the demonstration effect from us. We did a SLA in 5 months and change hasn't been done before. The same way that we're expecting that we'll do this and also set of our external bond holders.
Ghana Revenue Authority's tax assessment comes under scrutiny as Tullow Oil questions over $300 million charge on its 2023 operations after a similar concern by telecommunication company MTN. Also in this bulletin, Energy Minister Dr. Matthew Opoku-Prempeh lashes out at developed countries for cohesively asking African countries to embark on energy transition.
Africa's oil and gas industry, it's not even more than 50 years maximum. So to be told all of a sudden, one hot afternoon, that you have to leave those assets in the ground because we are transitioning, we in Africa feel that it is a bit unfair.
We've got details of these and many others coming your way all in a moment. Please stay. I am Pious, Kojo Backah, to our very first story. Government is optimistic that it will be able to secure all the required stakeholder buy-in for its domestic debt exchange program before the January 31 deadline. This is coming after it carried out what it describes as its final proposals to insurance companies, capital market operators, and pensioners. However, the leaders of these interest groups insist they need to do some final engagements with their executives and members before declaring their intention to participate in the program. It is, however, not clear for now what government is going to put on the table for individual bondholders in the domestic debt exchange program. Meanwhile, Finance Minister Ken Ofori-Atta has reiterated that government will do all it can to meet the January 31 deadline.
I believe we make an exceptionally strong case as Ghana, and I think everybody is looking for the demonstration effect from us. We did a SLA in 5 months and change hasn't been done before. The same way that we're expecting that we'll do this and also set of our external bond holders to also look at the future of the country, how to make sure that we protect their investments. But this is a period in which we all have to help.
The bit about fiscal discipline,
right,
in 2023.
Yeah.
What is going to be done in that direction to ensure that as government pushes ahead this debt exchange program in terms of real fiscal discipline, we see it in every sector, every ministry,
as
every
I mentioned, expenditures, are being cut to the bone, and you can ask from ministry to ministry, and they'll confirm that But more importantly, the issue of now our gift miss and HRMIs, which are computer systems, would really ensure on a commitment basis and a quarterly allocation that you cannot even post what is not in your budget. And that's really important because if you look at the past, you see areas in which certain contracts are signed way beyond budgets. This one will not, the system will not even allow you to. We ourselves as a ministry setting up an oversight committee to make sure that everybody stays within that ambit. And then more importantly, the review that we are doing on these various programs to make sure that deficiencies and leakages, are done with. And then ensuring the GRA, as you say, are now on a trajectory to being able to perform properly, a lot more digitalization, and that is going to help us immensely. So George, I'm pretty confident about that in the future in terms of the idea of burden sharing to get us through the hump.
So that's Finance Minister Ken Ofori-Atta in that interaction with my colleague George Uyafe speaking there. Let's get a better appreciation of this because we do know that the technical committee tasked to look at the concerns being raised by the individual bondholders in the domestic debt exchange program concludes its work today. And Professor Lord Mensah is an economist and also a lecturer at the University of Ghana Business School, and he joins us for more on the marketplace. Grateful, Professor Mensah, you could join us on the marketplace. Now, we know the Joint Committee will bring its work to a close today. What are your expectations? Kindly unmute for me, Prof.
Right, okay. So can you hear me now, please?
Better, yeah, I can.
Okay, I'm not expecting the individual bondholders to be treated same as the banks that have agreed on, certain levels of structures that they go in as far as this exchange is concerned. Individual bondholders are special, and for me, looking at the key role they play in the financial space, I think we should look at them differently. If you take the current structure that is being proposed, government cannot use all-size-fit-all kind of treatment when it comes to this debt restructuring. And I'm happy with the line that is being told now, for which government tends to meet all the stakeholders as far as the bond holdings are concerned, individually. And clearly, we can see that whatever may come out may be different from what the banks had with the government. I believe that individual bondholders are surprised as far as this kind of economic restructuring is concerned. This is the first time they are seeing the kind of interest rate structures that government is proposing on the table. If you trace back our history of bond market, clearly we've not had single digit before, and we've never had 10% before. So effectively, it's a shock to them. And so if you are going to treat them, then possibly you may have to come closer to what they are expecting. And so I don't foresee a situation where the individual bondholders will say, we don't want to participate in the entire debt restructuring at all. I think with the negotiation ongoing, there's going to be a convergent point. And with this convergent point, obviously, we're going to see interest rate structures on the table that is going to be a bit friendly, when it comes to individual investors. So we shouldn't be surprised to see, interest rate like 10% in the first year, 15% in the first year, and then possibly going backwards, we see more or less lower interest rate as the bond matures. On the other hand, too, if the individual bonds are so concerned about their principal.
Professor Mensah, to what extent do you think the outcome of the committee's work would contribute really to the expediency of getting the debt exchange program? All right, so it seems Professor Mensah's line has frozen, and we shall make sure we'll get him to speak to us on this subject matter. But in the meantime, the Ghana Revenue Authority's tax assessment of multinational companies operating in the country is coming under serious scrutiny. This was after oil production and exploration company Tullow challenged over $300 million tax charge on their operations for this year. George Yafe has more.
January trading statement and operational update to its investors described the assessment done by the Ghana Revenue Authority for its 2023 operations as lacking merit and is therefore pushing for an engagement with government and the Revenue Authority to review this tax charge. The oil exploration and production giant is also raising serious questions about a similar one that was done for last year, even after that assessment had been reviewed. But for some, this development can be described as interesting, coming after a similar 8 billion Ghana cedis tax charge on MTN, which the telecoms giant is also contesting. Joy Business is aware of another multinational that is disputing the tax authority's verdict on its tax obligations for its operations for last year. But the Ghana Revenue Authority is insisting that it stands by its work done on all these firms operating in the country. But is this the question of these multinationals don't want to honor their full tax obligations to the state based on their operations in the country, or the Ghana Revenue Authority is trying to find some innovative means to meet their tax revenue target for this year? Or maybe government just need more money to manage the economy in these challenging times.